And again, it's a pleasure to be your moderator for this session, Bridging Africa's Financing Gap, New Actors, Long-Standing Challenges. So we know that the gap is wide and the challenges are many. So we're told by the various individuals and organizations that work on this issue. Convening of the Atlantic Dialogues, we will draw out some action that we can all take to close this gap. So, once again, I have the pleasure of interacting, moderating an illustrious panel convened to eliminate this issue. Let me introduce them to you, starting with Edward Shikunla. He's the Minister of Finance for Malta. He's also a Member of Parliament. He's a former Member of Parliament with the European Parliament. He's a former professor. Anywhere, just take your seat. Thank you. Former professor, head of economics at the University of Malta. And he will be followed by, thank you, he will be followed by Didier Akote, who is the president and founder of Africa Search Group, which is, among many things, the largest recruitment organization. And finally, we have Sergio Suchadolski, the Director General responsible for strategy and partnerships at the New Development Bank. Don't be fooled by his youthful looks. He has achieved much, including being a former Chief of Staff at the Brazilian Development Bank. So to start with, we have a video overview of this at first.
African countries have suffered from a persistent and widening financing gap. With levels of accumulation of wealth reaching record peaks in industrialized economies, and more recently in the BRICS and Asian economies, and interest rates low, there exists a major opportunity to reorient savings towards high-return projects in Africa, most notably in infrastructure. Identifying and removing the bottlenecks to this investment is vital. What is deterring investment in Africa, even in instances where high returns are expected and political stability is fair? How can technology bridge Africa's financing gap? What role China and the new development banks? How can the risk of investment be mitigated and effectively managed in the region? Are there lessons from the successes of countries in Asia and Latin America?
Started, and as before, we will start with you. Estimates vary, but according to the UN Trade Organization, UNCTAD, Africa needs around $600 billion annually to fund the implementation of the SDGs and Agenda 2063, our development vision. $600 billion every year is what the continent needs to fund its development. So before we hear from our panel and answer this poll, can we close the finance gap? Sorry, what was that? You need to share that with everybody. Can we close the finance gap? Yes or no? And you have 15 seconds left to tell us what you think. Oh, wow. Oh, well done. Clap for yourselves. Yes or no? Can we close the finance gap? Can we raise 600 billion US dollars? And the rest of you are saying no, we can't, because the political will to mobilize that does not exist. The money might exist, but I'm guessing you reckon the political will does not exist. So we'll come to the panelists. What do you make of that, this almost even split? And I asked them to clap for themselves because we've had experience of voting on polls before. And so from our earlier experience today, we were rather, pessimistic about the global economic outlook. And so this is somewhat refreshing for me. What do you think? Can we close this financing gap?
It is modestly or moderately optimistic, and that shows it, that the risks are evenly balanced. The positive and the negative risks are evenly balanced, and once there's hope, we'll just discuss it. Definitely, some of the problems are behind us, if I could say that.
Some of the problems such as?
I mean, if the gap developed or got bigger, we have to remind ourselves that we've just had 8-9 years of post-financial crisis. At least I can talk from a political point of view, from the European experience, where all that time was just concentrating not on development, but navel gazing. I mean, first pump-priming the economy, then trying to reduce the debts, austerity programs. With it, also development was affected. So in terms of attention, both in terms of attention and both in terms of money and appetite for investment, that's the past. Now we can say that at least this year, when we met, the finance ministers of the 28 countries met, we had very good news that all of the countries are started growing, unemployment is falling, employment is growing. So at least from the Western point of view, there's some modest hope that that's behind us.
Okay, let's define our terms, because different people will talk about financing for infrastructure. We're talking about Africa's development needs. So presumably, being an economist, you see different types of financing.
Yes, of course. But it also goes with it the appetite. In other words,
but what type of finance?
I'm sure whatever figure you're mentioning, the funds are there. But the point is, are they going to be used? So then there are many factors. But at least from the European experience, the banks now are so heavily regulated for good reasons, so that they won't make the mistakes they've made in the past. I'm talking about commercial banks and investment banks. And both with anti-money laundering regulations and financial regulations, they are quite... That's why the European Union is going into another area, which is capital markets union, capital markets. So there are other alternatives. So your question is whether it's the banks or whether the stock exchange or equity finance funding. I mean, my colleagues here would be able to help you out on this. But overall, there must be an appetite. And if you're restricted and cutting mode, you're not in a mode where you're thinking. But there are many indications, I could say, that from a financial point of view and investment point of view, the things are a bit more optimistic than they've been since then.
We'll see if that optimism is borne out. Didier, let me come to you. Big board. You work with people, skills. So what, in your opinion, should we be financing?
Well, I think you're right. We need to clarify what type of financing we're talking about. Are we talking about short-term financing? When we talk about SMEs that we support, they need short-term financing to support their activities. When you talk about a government willing to fund a road, a port, or gas pipeline project, they need probably long-term financing. And the thing is that whether you're on the short-term, mid-term, or long-term, the gap is still huge. Small and medium enterprises. They need
Before you do that, I'd like you to answer the question about what we should be financing, because a lot of the time on that, but from where you sit as someone who deals with people and skills, what do you think we should be financing?
We should finance private sector. Why? We need to create more than 12 million jobs every year. And private sector is 90%, SMEs in 90% of the private sector, and they are the ones who provide the jobs. So they need more support. Only 20% of these SMEs have access to finance. So that is priority. When I'm talking about private sector, I can even move to education. We've been talking about skills, capacity for countries today. The private sector in the education sector represent between 25 to 40% support the private sector. So in my opinion, private sector is the main driver of this transformation of the continent that needs more support.
Where does technology come in your picture?
Technology is transverse, you know. Come back to education. In Kenya, for instance, I'm sure you've seen this amazing project that allowed young kids inside a country to access education through the phone, not even smartphone, just basic phone, where a teacher can exchange with the students, brings a lot to the education system, or M-Pesa, for instance.
That's our mobile money
Exactly.
system, yes.
But with mobile money, you reach out to like 70 to 80%. Kenya is even more. When you look at Orange performance in Côte d'Ivoire, those guys, they generate 20 billion CFA every day just through mobile money. So technology, I think, is all the way. And when I say you need to finance the private sector, it's also to finance technology because it's part of the day-to-day life today, in fact.
Sergio, I'll come to you because earlier the audience, were treated to the expert opinions of a panel that was IMF and World Bank. And so sitting as you do, you've just flown in from Paris. For these new actors in the financing space.
Thank you. So New Development Bank and other new multilateral development banks can play a very interesting role. And coming even to your earlier two questions regarding technology, regarding the finance gap, I think that we are one more institution that can mobilize resources to bridge that gap, not alone. We can mobilize resources, not only our own, but also of private sector, for instance, in being creative with interesting instrument where you can leverage a lot of private sector capital with spending very little. In terms of also making the capital that you're deploying more efficient. One way you can do that, and we've done in the past in my previous position at the Development Bank of Brazil, is plugging geo-reference to...
What do you mean by that?
I mean by that, you map in space where you are investing, different class of assets. You're building a school, you're building a road, you're building a energy generating renewable energy plant, and you know how much you are investing in each region of the country, and some of these infrastructures, they connect to each other, right? They're not in a development plan. So you have a very well-informed development plan for each figures, but the actual impact that you can later on measure on a specific region or municipality or state of a particular country. World Bank is also doing that.
Okay. So that talks about improving the quality and access to capital.
That says about how you allocate capital in different projects that communicate to each other in a more efficient way, and how you also across a country or a wider region effective and intelligent manner. In terms of access, I think then technology can Facebook platform that it's also a bank where you can actually both transfer money and also invest if you want. It's also a Facebook, and stores also have their platforms for selling products there. This is completely disruptive, right? And so very few of my colleagues at NDB actually carry any money on their wallets anymore. It's just WeChat with your smartphones. This could also be used by SMEs for smaller or medium. This can also be used in crossing your data, see what your risk profile is, and you get to a bank and in a very quick there have a direct impact and can actually help bridge the gap or finance for Africa to use the correct tools to mitigate all the factors that today are blocking the access to capital.
So you started answering this question, is there a finance gap in Africa? Isn't it that the cost and political risk of doing business in Africa are too high? African money is leaving Africa to be invested elsewhere.
I don't quite agree.
You don't agree?
Many years
Why
ago,
not?
I lived in New York, and we were studying, I worked at a private equity firm, and we were studying to launch a fund for Africa. We're just talking about that because we have someone in common who was part of that project. And we ahead, Carlyle, private equity firm based in New York, they have a fund for Africa. Other major players, they're all very interested in Africa because of the high returns, but you have to know how you do it, right?
Didier, what was your response to that question? You seem to be agreeing with it.
Yes, I think the perception is different from the reality. When you look at the numbers, in fact, the projects that have failed in Africa because of political risk are very few. Then people investing in Africa made a lot of returns. And he was talking about Carlyle, Afrique Fund.
What sort of returns are you talking about?
I'm sorry?
What percentage of returns are you talking about?
In terms of failure?
No.
It's between 20 to 30%.
20 to 30%.
And the risk, in fact,
Okay.
the way we perceive the African risk is completely not related to the reality. And we need to tell the narrative differently as well. That was one of the discussion of this morning.
Yes.
People making a lot of money in Africa. You know, out of the $22 billion have been investing in Africa the last 6 years through private equity fund, all of them made their way. So that's a reality we need to tell. Investing in Africa is not a risky investment. It's a very profitable investment, so we need to correct the perception.
So what about the second half of that question, that African money is leaving Africa?
Well, if you still and most of the money that leaves Africa is stolen money. But people who invest in Africa, as an African, they leave the money in Africa. So we need also to make sure that as an African, we invest more in Africa, like somebody was talking about Dangote this morning. So money is now leaving Africa.
But isn't the problem that there are very few very few Dangotes, and there are fewer people still who account for a lot of the illegally acquired funds, which are then shipped abroad. And the rest of us who are trying to make a decent living, our funds don't really amount to much when you compare it to the illegally acquired monies.
Yeah, you may be right, but you know, the African economy is not made of those illegal money from the government and buy an apartment in Paris or in London or wherever. It's those people who do the day-to-day living, who invest in SMEs, who sell products out of the streets. Those are the ones who are making the African economy. So I think it's just a way to see how we can leverage on these people who basically build the African continent. And I'm sure we come back to discussion how the banking system can support probably better
We certainly will.
those small entrepreneurs, those SMEs. It's 90% of our economy. It's not those multinationals that are making Africa big or great again. It's the African SMEs and African entrepreneurs who leave the money in the continent. Now these thieves from the government.
Edward, those several things that got you writing on your...
Well, it's perception now, but perception is not something, you think of by reading the papers, because there are indicators, the ease of doing business, the World Banks, and so on. So if you're at the bottom of the list, you've got a slim chance of getting investment. and if you have a modest ranking, you stand a better chance. And but sometimes it's also the industrialist countries' fault. For example, when it comes to development aid, the EU gives quite a substantial amount, but has very little to show for it. And
in what
speaking
sense?
to ambassadors in some African countries, they feel very frustrated that when they compare, say, themselves to China, for example. I'm not saying that they don't invest in projects or there aren't success stories, but...
No, please explain what you mean by there's little to show compared to China.
Because they support budgets. And when you support budgets, you don't know where the money goes. Well, it goes, but you can't say, look, this bridge is mine, or European, or with a lot of stars and all that sort of thing. While everybody knows how China provides, the project with financing, everything, and they say in a year's time, you've got the keys, and you have a bridge, you have an airport, you have a tunnel, and so on and so forth, or a farm. And that feeds itself on the pouring money down the drain, or that kind of statements which do a lot of been mentioned, perception of corruption, and that really kills and discourages a lot of investment. Thankfully now, as a result of Panama and other, Paradise and so on,
Paradise Papers,
the European Union is moving ahead very fast in not only making sure that the European itself has a lot of transparency and exchange of information, but now is pushing very. And last week we drew up a blacklist.
Let me interrupt you because I think you were going where. Papers, the Paradise Papers, shown us that even if there is corruption on the continent, on the African continent, unfortunately, we find that there's also corruption in other parts of the world. And so therefore, Africa suffers a disproportionately unfair characterization as being corrupt.
First of all, pressures are being put on financial jurisdictions. So it's not a question where the money is originating, but from the jurisdiction itself, that register the ultimate beneficial owners of companies. Cannot have companies of companies and so on, where you don't know who owns what. And unfortunately, in a way, the African countries are now between how would I say, a stone and a hard rock, something like that.
A rock and a hard
whereby,
place.
They are being asked to have high standards of governance. So what was before the Washington Consensus, which were macro sort of standards, now they are taken as given, and they are now being pushed in exchanging information, being transparent themselves. So 17 countries have been living 40 countries familiar with, who are on a grey list, and they are not on a blacklist because they've promised that within a year or 2 years they will conform. So there's a lot of pressure there, which would be healthy for developing countries.
Okay, Sergio, you wanted to come in?
Yeah, I think it's very important that institutions that are financing, investing in Africa have good governance. Good governance, I think, is the basis of everything. At NDB, we have a code of ethics and conduct. We have a policy. We have a anti-money laundering and corruption policy that is approved. We have a whistleblowing policy as well, and a very strong compliance division that is very effective and vigilant.
How African countries are represented in the bank? How many African countries have access to the financing from the bank?
Okay, so the bank it was founded in 2014, but started its operation in the middle of 2015. So the bank is roughly 2.5 years now, and the founding members are the BRICS countries. So the only African country there is South Africa for the time being, because although the bank is known as the BRICS Bank, and it was founded by the BRICS countries, the bank, in its articles of agreement and more recently in the term conditions and procedures for new members, is open to all members of the UN to become members of the bank. Also, the bank has its headquarters in Shanghai, in China, center in Johannesburg, South Africa. So this is a very strong signal that there's a lot of appetite for Africa, for doing business in Africa. And I think it's very relevant to mention two aspects that the bank is very new compared to other MDBs, which is that the bank aims to
other multilateral banks.
Yes,
yeah.
Yes. Aims to open with a local currency, and we already started doing it by doing green bond issuance denominated in Chinese currency, the RMB.
And what does that do for us?
That does for us because you don't run the foreign exchange risk. And if you look at infrastructure projects, which are long-term infrastructure, this is a very key element that has created a lot of problems in the past for countries that ended up being indebted or paying even more than the double of the original amount because of the FX risk that they run. And the second aspect that is important to mention is that we work with country systems. So the first assessment that the bank will do when it's doing an operation is to work with the local regulation of the country to do an assessment and to apply it instead of having double standards, applying another standard from like other multilateral development banks do that, and that creates a lot of costs and very burdensome. So this is something that we also are innovating in doing.
Please take out your phones, your gadgets, and go to Spot Me, because we hear a lot about the challenges of investing in Africa. And so I'm assuming that there are people here who have invested on the continent in some shape or form. So the question is, what bottlenecks or challenges have you experienced while investing or attempting to invest in Africa? Yeah, if we could display that question. You've got about, just give me one word. What challenges or bottlenecks have you, is the app working? No, it's just that they haven't displayed it, okay? Doesn't seem. Is the app working? Somebody? Having problems with the internet? Oh no, we've been having problems with the internet. So, so let me poll you then, you know, the old-fashioned way. Where are microphones? Okay. What challenges have you experienced when you've, you know, tried to invest or invested in Africa? Just put up your hand and we'll bring a microphone to you. Anyone? Okay, yes.
Hi, my name is Sandy, so I'm from South Africa and I'm from the Africa region. So I can't say I'm an investor in Africa because obviously I'm young, I don't have the money yet. And for being a former entrepreneur, we struggle with is we get seed funding from donors, typical donors. Grant funding is not as difficult to get a hold of, but then we struggle when we're in growth phase. People are not interested in investing. Well, I don't know if there's a lack of interest or just high risk, but that bracket between 100K to about 250 USD is a very lonely place. And then when you get over that growth phase, and then the people almost want to come back and invest in you at that time because they're looking for the big ticket stuff that's like equity. So my challenge, my struggle is the missing middle, is I don't feel like there's enough people
they want to come in for the glory phase.
Yes.
Okay, anyone else with a perspective at the back there? Thank you.
Hello, my name is Chika, and I'm a tech entrepreneur, and this really hits home for me. So specifically, the issue is with tech startups across Africa, we are forced to go to the Valley. We're forced to go to Europe to get investment, specifically in the range between $1 to $5 million. And again, once we're in that growth stage, what ends up happening is the banks still see us as very risky. You know, those who are high net worth individuals who have the funds to put into these startups, technology startups, and quite frankly, don't really want to understand you know, how we're growing and what's the return on investment for them. And so actually turning into American companies. So for example, I got investment from 500 Startup, which is the Silicon Valley incubator, and I had to change my company from a Nigerian company to an American company. So now as Africa, we're actually losing, you know, that potential economic development because we're now being shifted. And I'm actually seeing countries like China and India, these startups are going to the Valley and they already raised $1 million from their home country. So they come there saying, look, we're not looking for investment, we're just looking for collaboration, versus us, we're now, not only did we have here to raise investment. So that's a really big problem, especially in the tech sector.
Thank you, Chika. That's quite a bit. And the lady in red, that will be our final one. Thank you.
My name is Uzumaki Chukwu. I work with a private equity firm in Nigeria that's investing in agriculture. So I think we do have some perspective on some of the challenges that
So go ahead, please. Thank you.
So I think a key one investing in Africa, not just Nigeria, is that most businesses, especially in the middle, SMEs, don't understand corporate governance and how that factors into running a successful business. So you know, with private equity firms who are trying to invest, you're trying to bring in some change. So there has to be a board of directors. There's a certain way to do things when you're running your business that most businesses don't just understand. And I also, especially in agriculture, don't have a understanding of some of the key risks and how to manage that. And risk with agriculture. And Obi spoke to it a bit when she was commenting on the last panel, that with most businesses in Nigeria who are processing, having that steady supply of raw material to your factory on an ongoing basis so that you're guaranteed that you're going to run at 80% capacity utilization all year round is a key challenge, and we've not seen anyone who has really got an understanding of how to solve that challenge. So that's also a key one. Okay. Sorry, just to also comment.
Sorry, we need to move on with the panel. Thank you very much for your perspectives. I'll give you an opportunity later on to share your thoughts with us. And so Didier, you were talking about, as all three of our speakers, we've heard about the missing middle, we've heard about, you know, Africa access funding. We've heard that they've had to go outside of the continent to access funding, which it seems their counterparts in Asia don't have to do. And we've also heard about, you know, we seem to be quite entrepreneurial, but we don't necessarily have the skills to build viable businesses.
Well, what they said is really typical of what entrepreneurs are facing in Africa, and the SMEs especially. To come back to the cases, for instance, we need more venture capital, because this is typically venture capitalist approach where you need to take a risk. Invest.
So venture capitalists will go for the middle.
And you need more what you call mesofinance, is between microfinance and the regular finance. The continent to support those type of initiative. And third, you know, the banking system is not structured to support those type of risk, unfortunately. So,
what type of risk is that? How would you classify it?
It's they say it's too risky. Entrepreneurship,
yes, but what is the risk?
SMEs is risk of failing, that the entrepreneur disappears. Let me give you a quick example. In Benin, with the government of Benin and the World Bank, we've conducted a project, and I was leading the project, where we have selected 130 entrepreneurs on processing panel. And basically, the idea was to provide them financial support. But how did provided mentors. We run through the business plans, the development programs, and then we gave them 20% grant, free money. But the condition was, if your business is sustainable, you may be able to raise the 80% remaining from the bank. So we partner with the banks, telling the banks, look at these companies, they're great. We did the job. We can give them 20% free money if you can get the 80% as a loan. And very well. So I think it's just a way to build the system in how you make sure the bank feels comfortable by whether providing a kind of guide and make sure all these companies are properly registered. You give them some mentorship. And I mean, it's a great example that is working. And
so you had to innovate your approach.
A little bit. And on top of that, to come back to the venture capital, we don't use enough the diaspora. You know, diaspora send more than 60 billion every year to Africa, to like social support.
Health and education.
Imagine if you can get like diaspora bond. And in Paris, for instance, you have a diaspora organization called Club Efficience, who is about to launch a project like this one to take the risk. And I think $60 billion is quite some money.
You've been nodding away.
SMEs in Africa, in Europe, all over the world. And the same thing happens to them, whether you're even in my country, in Malta or wherever. If they go to a commercial bank, they don't lend to them because they are high risk. The risk of failure is high, so they don't lend. However, the opportunity there, the AIIB, the European Investment Bank, has a scheme, it's called Jeremy, whereby the member state borrows a substantial sum of money, which is then given to the commercial banks to lend to these SMEs, and the AIIB will stand for guarantees. In other words, what the bank will provide. It was very successful, it was all taken up, and we're in the that will provide more that type of financing for SMEs and small entrepreneurs.
So Sergio, I'm sure you have a perspective on this, but there's also a specific question for you. I think the SpotMe app is working now. So if you've got questions that you'd like to put to our panelists, please continue to use the app. And the question was that, you know, there's a general sense that the lending from the IMF and the World Bank, the existing multilateral banks, has been fairly restrictive. So what would this new bank do differently?
Well, first, it's very difficult to compare with the IMF, which is to provide budget support, as the minister mentioned before. In terms of the world systems, for instance, this is an area where NDB, I think, innovates and it differentiates itself from other multilateral development banks, that it wants to help build and reinforce the national institutions, the regulations, work with countries and apply their standards. Of course, doing an assessment, because there will be situations where there might be a lack, there might be a gap in the regulation, and we will work with countries to improve and to provide all necessary support. So in this sense, it's also important to mention why NDB was created, right? NDB was created after a countries trying to change the Bretton Woods institutions, right? For many, many years, they tried to do that. It took a long time. U.S. Congress, for instance, took 5 years to approve the change in the quotas. If you look back 20 years, 17 years, in the year 2000, G7 countries had a share of GDP, world GDP, that was double that of BRICS countries. Now, this year, these countries together, the 5 countries, they are larger than the G7 economies. They have 42% of the world's population. They have territory. So there is a new world that it's there. Are we here to rock the boat and you know, no, we are here to complement. We're here to learn from these institutions. We have partnerships with them. Many of our staff come from these institutions, Asian Development Bank, World Bank. We plan to work with them because the finance for infrastructure gap is huge. It's over $1 trillion. We could create 50 new NDBs and it wouldn't be sufficient, but we can make it different, right? We can be masters of our own destiny.
And we're drawing new questions from you. Does the new development bank really have the financial weight to alter the global development financing landscape? China seems to be interests might affect their agenda.
Very good question. So China has 20%. It's a founding member, but it has So it's a very interesting experience to start this bank where emerging market developing countries are in charge, and each one of them has equal shares in the governance. I think that's the first thing that I should mention. In terms of the ambition to reshape the international financial system, I think we can contribute, right? We can contribute even to reshape the institutions that we founding members are also members. There are other...
You're contradicting yourself. You just said you're not here to disrupt, but to complement.
Yes.
But what are you telling us now?
Well, you multilateral banks do, but in a very small scale. Can we do it in a larger scale and prove that it works? Local currency is one of them.
Okay. Didier, you want to say something?
Yes, I just wanted to add that, you know, if you look at the figures, last year, DFIs contribute only to 13%, 13% of the project financing in Africa. So
DFI is the French acronym. You mean FDI?
Yes, Development Financial Institutions.
Oh, okay, thank you.
DFI. So
okay.
their portion is quite low. But if we can, like local capital markets, if you look at the local capital market this last years, all the countries who have when you issue a bond, I mean, after a couple of hours, you have nothing left because you have a lot of domestic capacity. Yes, to make this happen, then count on the others and the DFIs. So local financial market and capital market can be a way. When you look at pension fund, you look at the insurance companies in Africa, they have so much liquidity.
So Didier, let me ask you to come back to that. Let's see. I'm told that the app is now working. And so I've got a second question for you, which is to raising finance on the continent. How would you address if the app is working, please display the question. Yes. No, we've moved on. The app wasn't working, so the next question, which is how would you address So can we go to the next question? Okay, I think it's the internet is not our friend this afternoon. So again, audience, the old-fashioned way, how would you address some of these challenges? Did already diaspora bonds, pension funds. What else could we do to address some of the? Yes, sir. Can we have a microphone here, please?
Thank you. I think also I have seen that in the last 6 months, I've attended one of this kind in Turkey, then 2 weeks ago, one in Ivory Coast, and today here. I think the recommendations should be sent to the OAU summit.
The AU.
States. Yes, because at least in Africa also, we are blessed with 1 or 2 or 3 or 6 countries that cannot each of them sacrifice $1 billion for their continent. If Europe France, England, America, helping Africa. And really,
So calling upon the generosity of African countries themselves.
yes, I think also we should really put to them that it's a responsibility and it's an obligation. Because what we are hearing, like what the minister said, the monies that are going to Europe from Africa, as much as they are stolen, we know who the families are. Let us go to them and tell them part of it should be given to Africa. You know, now we should really.
Okay, so that's the second thing. You've talked about commodity-based development, but you're also saying that the Swiss banks, once we recover our money which has been stashed abroad,
let them give it.
Bring back the money. Obi, you hear that, huh?
It belongs to Africa.
That's for Obi, bring back the money. Anyone else? How would you address the challenges of raising finance? Yes, over here we've got...
I believe Sergio earlier, Rafael Benke with SEBRI. It's the Brazilian Center for Foreign Affairs.
Okay, thank
I believe Sergio brought forward really a groundbreaking aspect, which is to bring innovation to, I think, going earlier to the question you made on the difficulty of investing not only in Africa, but in other a certain area, a certain region. And I think bringing, I think georeferencing or whatever he brought to the picture brings a huge transformation. It's true what the gentleman said about how much IFIs may contribute or not to funding, but the fact of the matter is, if you are building a power station and you need 50 megawatts to a small town, and you need 90 megawatts for a plant, if you get to know that and you combine more scale and have more viable projects, and hence funding will be easier. So I think this disruptive technology, this gap that we're talking about, investment not only in Africa but worldwide, and this technology is accessible. And you said we only talk about infrastructure in Africa. It's not true. If you talk about agriculture and how much georeferencing is already transforming this for the small farmer, and if we get this big data together and how we use that for funding, this can be very leveraging.
Thank you very much for that. Laundry. Sorry, I'll come back to you. I saw him before you. Laundry?
Thank you very much. I am Landry Signé, a senior fellow at the OCP Policy Center. So I think perhaps one aspect which is missing in the conversation may be the importance, the critical importance of domestic resource mobilization and how this could also be leveraged to attract both investment or public international transfer. And when I speak about domestic resource mobilization, I speak around three factors. The first is, of course, taxation, but we also have savings, and we have a better management of natural resources through the negotiation with international corporations and profit sharing. So how will you envision bridging the gap in or fixing the gap, addressing the gap in domestic resource mobilization and connecting it to leverage and secure additional funding from the international?
And you wanted to say something.
Hi, I'm Mary Jean, and I'm an editor with the digital magazine, The Global Communique. My comments are really around the concept of the corporate tax system, where Oxfam, for example, released a report that in 2010, Africa lost about 11 billion just in the corporate tax system from multinational companies.
Illicit financial flows? Or just...
Yes, and also, I mean, there was a conference with Financing for Development where there's an initiative on the BEPS process and the base erosion and profit shifting, just to make sure that indeed Africa does benefit from the multinational companies that profits from the African continent. So how can the global tax system itself benefit African countries as well?
the country-by-country reporting regulations which are coming into the EU, for example, would help. In other words, companies can't just say, look, we've made so much profits, we paid so much tax, but where? And you'll find that they haven't paid any, say, in Africa. So the country-by-country reporting would go a long way there. However...
So that seals the loophole. So that's one part of the question that you've asked. But there's a second part to the question that Laundry asked, which is, once you've leveraged domestic resource mobilization, and tax was one aspect of that, how do you use that to secure...
Well, I just wanted to finish the previous argument that, on the other hand, I don't agree that African countries in increasing their corporation tax would help. You know, if it's done on a legal basis, some developing countries, that's how they attracted some certain investments. And if you remove that attraction for some countries, so I don't want to generalize, but you know, there is a big push on transparency, which is fine, against money laundering, which is fine, against sales and financial. But this push for tax harmonization, which is being pushed at the European level, but slowly it could even go worldwide. On the that it would be a race to the bottom, you know, and in the US now has started that. But I would be the last person to push African countries in increasing the corporation tax. I'd rather make sure that they do not erode the base or shift their profits. That is important, that profits are not shifted. Say, if they are made in Africa, then whatever the rate of corporation tax is, they have to pay it there.
Okay, Didier, you were on a roll with your various proposals for how we bridge the gap, and to those specific questions around domestic resource mobilization. And I believe you were going there when I interrupted you. So could you please repeat the question? One, improving it, because many of our countries are still below in their revenue collection. And how, you know, once you seal that loophole, you would leverage that to get additional funding.
Yes, first thing to talk about taxation. I think you can have a broader base with a lower taxation to encourage people to pay. Because the thing is that the government relies on the 10% of the companies that are able to pay, and they get them pay the maximum. So it's not sustainable. So people end up not paying the taxes. So I think the taxation reform, it's crucial to make sure people contribute, because it's not too. The second question is the local domestic revenue. That's where come the DFIs. I mean, I have nothing against the DFIs. But if you have like an infra project for 100 billion, and you manage to secure domestic revenue for 30 billion, for instance, and you issue sovereign local bond in local currency.
Yes.
To make sure your local, your citizens don't be afraid of taking the risk, then the DFIs can come and cover the first tranche of the risk. Like, let's say, 20% of the first tranche is covered by the DFI. The domestic investors come in the second tranche, where they're covered by the DFIs. And then the government itself and people buying the bond, and the local banks, insurance company, pension fund, come in the last tranche. So their risks are covered. So it's a kind of partnership where you leverage on the domestic resources, telling people basically, I have the capacity to finance 50% of this project. If you can come on top and cover the risk, I'm very comfortable. And this is what's happening more or less in most of the bonds that have been issued lately in local currency. What is also, to come back to your point,
yes.
You lower your risk in terms of rate exchange. 35 billion euro bond will come to maturity. So countries who have issued euro bond Right now, they're like, you know, moving to any the rate will get so high that I'll need double my local money to pay back this Eurobond. So raise money locally, domestic resources, cover a little bit by DFIs and governments could be a response, and then you can involve the diaspora. Diaspora can come in a trench, and so you get all these people together.
Sergio.
Yeah, I think that the conversation here is about how do you create an environment that is very positive for entrepreneurs, for business, right? And I think instruments in each sector is a fundamental piece. So we were talking about tax collection. You can create such as what? If you go to a restaurant and you ask for a receipt, an official receipt, so that the government is informed how much you paid and they can collect the tax, you can, at the end of a year, use that proceed for different means, including paying the annual fee for your car. You need to pay a tax for your car annually, but now this is going even to other reasons. Some people are even government giving actual money back to people. But in this sense, part of the economy that is informal, the collection of taxes is much higher.
I have a lottery.
Your lottery?
Every week, a lottery of all these tax receipts. And prizes are given.
So this is one example.
There are many ways.
Yeah, it's creative. There are many ways. I'm just giving one example.
So what else, given your experience in Latin America, what other examples can you give us when it comes to raising finances, domestic resource mobilization? What else?
Listen, I think there is a discussion that it's larger than that. It's not only in Latin America, it's a global debate. And it's very interesting because the starting point of that debate that was already around, but now it's kind of structure, is a recent, right, rating agency. And it's interesting because one of the findings of the report is that multilateral development banks have been extremely conservative when managing their finances, that they don't leverage as much as they could, that they could leverage as high as 72%, which would unlock $1 trillion of capital that could be applied, and they will still keep the same rating that they have now. This is a shocking figure, and I think a very interesting debate comes out of that, in terms of getting that money and that is in treasury and putting it to the operational side.
Okay, so look, we'll give the internet one last chance to support us, and we're winding up now. And so you know what I'm going to do, which is to ask you the same question I asked you at the start. Can we close the finance gap? And so please respond as quickly as you can before the internet dies on us again. Can we close the finance gap? I've got a second question for you after this. Let's see, 4, 3, 2, 1. What are you saying? Can we close the finance gap?
Yes.
Oh, fantastic. Well done. Yes. So the second question then. When can we close the finance gap? Remember, we started by the UN telling us that we need $600 billion every year to implement Africa's development aspirations. Can we do that in the next 5 years, in the next 10 years, or by 2030, just in time to tick the SDG box? What do you reckon? Okay, so you've got just 10 seconds to go. Oh.
Realistic.
So there we go, panelists. So there is optimism that we can raise the money, but unfortunately, the reality of the world we live in reckons that we are going to do it just in time to save something.
Yes, no, I think that it doesn't factor the fact that the continent will generate revenue, because it's quite I wouldn't say pessimistic approach, but it means that we need the 600 billion each year without generating revenue.
No,
so I mean, my opinion is we have to select and prioritize. Where do you invest first to generate enough revenue to cover your costs and raise additional money? So, you know, when you talk about, you know, bridging the financial gap in Africa, it's always like we have to cover all the needs at the same time. It's just not possible.
It may not be possible, but hang on, listening to you, the audience feels that we can raise the money. But the audience feels that we just don't see it as a priority. Between 2029 or thereabouts, you'll see a mad rush to raise $600 billion in that year. That's what I'm seeing from this. Yes, Sergio.
But do you think it's really only about the figure, the money? Isn't it how you deploy it? Isn't it how you monitor? Isn't it what kind of environment you are building? I like this phrase from an old movie, Field of Dreams, and it's with Kevin Costner. And he says, if you build it, they will come, right? I like that phrase a lot. And I think that, you know, sort of towards the question that told us about, you know, why not Bangalore in Nigeria, right? Why not, I mean, maybe Vale is, you know, there are Shenzhens, there are plenty of other examples that you can build little by partnering with the national government, local government, different agencies, among entrepreneurs, bringing expertise.
So please be aware that you're making your final remarks. We may have started late, but we will finish on time. Okay? Please complete your thought.
No, that's pretty much what I had to say.
Edward.
I think should be encouraged by the fact that from recent experience, we're seeing that some aspects of development need time, but some others can make quantum leaps in a very, very short time.
Such as? I mean,
take the transfer of money by mobile phone. We haven't reached that level yet in Europe, but you have reached it in Africa. You've gone ahead.
Okay.
You know, it's encouraging to see that in some ways you don't need to go through all these steps which Europeans or North America have gone through. It doesn't apply to all sectors and all aspects of development.
So let me just check that you've got nothing more to add before we close. No.
Maybe just to add that innovation is part of this cycle. So when we sequence it with innovation, like solar panel, for instance, it was so expensive before. You couldn't have a solar farm, but right now it's equivalent to gas or you know natural. So I think if you factor faster.
Okay, so ladies and gentlemen, I'd like to thank you for your participation. I'd like to thank you for being open to the panel and their extreme shift in mindset and the optimism that you display. So clap for yourselves. But I'd also like you to appreciate the panel. We've had such a fantastic engagement. You've shared your experience, your expertise, and you've created optimism in this room as we wind up for the day. So thank you very much, gentlemen.
Thank you.
Thank you.
Okay, so that's it for today. Thank you very much.
Thank you.
Thank you.